All right.
Yay.
All right, we're on Facebook Live. So happy Thursday to everyone. It's Christian Munive here. I broker for Mpower Mortgage. I'm sitting here with Lizette Guzman.
Hi, Chris. How are you?
I'm doing great. Hey, so I wanted to do this video for you guys just to give you an update on what's going on in today as far as what's going on with the mortgage industry. You guys know I own Dynasty Real Estate and also Mpower Mortgage. So I wanted to bring Lizette out here. She's heavily involved doing loans. She's been doing loans for quite a bit. So tell us a little bit about your background, Lizette.
Well, I'm a loan officer and I've been having my license for a while already. But I've been in the mortgage industry for the past 16 years.
Oh, wow.
Yeah, it's been a long time. And the way I started being as a processor.
Awesome.
So obviously, I decided to get my license, and I got my loan officer license, and I've been licensed for a while already.
Awesome.
So
yeah.
I've been doing this for a long time already. Yeah.
Cool. I always say if I had 10 Lizettes, I would be a lot richer. She's a really hard worker, and that's why I decided to bring her on board to share with you guys some of the tips on some of the things that is going on as far as the change, with the COVID-19 that's going on. But we're still going strong. First thing I wanted to talk to you guys is the difference between us, Mpower Mortgage. We are a broker. Okay, so there's a saying brokers are better. That is true.
It is 100%.
100%. So I'll explain to you a little bit about the difference between the broker side and the mortgage as far as the direct lending side, right? So it's just pretty simple. As a broker, the biggest difference is that banks compete for your business, right? So if you're out there looking for a loan, you have multiple sources out there that are looking to give you the best possible deal, right? I'm not saying direct lenders are bad, but they are just limited to what they have on the table. With us, we have, it's like almost 31 flavors, right? You choose whatever you, all these different programs out there. So definitely the flexibility is there. What I would say besides the flexibility is different scenarios that other banks may not often offer is definitely available to you. So again, brokers are better. Mpower Mortgage, broker. So definitely we want to make sure that we're helping out the consumers. In today's world, we're still having a big drive as far as first-time buyers. So I don't know, what kind of programs do we have out there to help out some of these first-time buyers that are starting to get into their first home?
Well, we still have the FHA program, obviously. The 3.5 down payment down to 600 FICO score. Most lenders out there, they're doing like a 640, 660, even they start asking for a 680 FICO score. We still do the 600 FICO score.
That's awesome.
So that's a good thing, And we also have the Cajafa programs. We also have Chinoa programs, and they do help you with the down payment. So that's one of the good things. We don't need a 680, or we don't need a 690 or anything like that. We need just a 640 FICO score. That's all we need.
All right. So I'm sure some of you guys that are out there, they're experts, that been actually, maybe you're a loan officer, or you're in the business, you understand all those Cajafa, FHA, all those different lingo's, but just narrow it down for the consumers that may not understand exactly the difference between, let's just say, for example, a traditional FHA, right? And let's talk a little bit about the Cajafa. If you can just kind of give an example of what the difference is on those programs.
I'm just gonna do a simple example. It's based on a number so simple, right?
Okay.
On 100 purchase price, we need at least 3.5 down payment, which is gonna
FHA,
on the FHA side, right? So that's gonna be what, 3,500? That's how much we need, right?
3,500, yeah.
3,500, just down payment. That doesn't mean that's gonna be the closing cost. We're still missing that side, right?
Correct.
For the closing cost, probably we're gonna need another $4,000 or $5,000.
Okay.
So just to buy 100,000 purchase price, we're gonna need about $7,000.
Okay.
7,000 to 7,500. That's how much we're gonna need.
Awesome.
So on this program, they're pretty much gonna help you with everything.
Okay.
So we just need the 640 FICO score. They do need to have their job currently, and we're ready to go.
Okay.
That's it.
Cool. So is there like a difference? Is maybe a little bit, the rate maybe a little different? I mean, why wouldn't I go directly with the Cajafa then?
Well, Cajafa, they do require a higher FICO score.
Oh, okay.
That's one of the main things.
Gotcha.
They do require a 680 FICO score, and then you have to pay that money back.
Gotcha.
As soon as a property has some equity and you decide to refinance or
Okay.
you decide to sell the property
Okay,
back,
okay.
you're gonna have to pay the money back.
Okay.
Versus the other one,
Uh-huh.
you don't have to pay it as long as you be making the payment for
Mhm.
3 years and you be making the payments on time.
Mhm.
They already forget about that. So
Awesome,
you don't
cool.
have to pay that money back at all. Mhm.
Okay, perfect. So the traditional would be your FHA, right?
Right.
So I always say FHA is a really good first-time home buyer loan, right? If you got 3.5% down, you're gonna get to enjoy, the best rate. As far as the closing costs, which you mentioned,
Right.
In today's world, to be quite honest with you, you can negotiate that.
With the seller.
With the seller, a lot of sellers want to sell, so, if your buyer wants to buy, you can easily negotiate that closing cost. I know a lot of my agents, I've been seeing that, the majority of the closing cost is being paid by the sellers, things like that.
Right.
One of the snags that we have right now, and like I said, I see a lot of the pipeline go through, is the appraisal, so, with the COVID-19, what I've noticed now is that appraisers are out there actually doing drive-by appraisals. Is that true?
Exactly,
Yeah.
it is.
Mhm.
They
Yeah.
just drive by the property just to
Mhm.
make sure, actually the property is there once
Okay.
they're doing the value for the property, but they don't need to go inside. Most of the appraisals is like a small percentage that the appraiser have to go inside the property, but it's a really small percentage.
Okay.
But most of them they're being done by drive-by only. Mhm.
Okay, cool.
Yeah, so that's a
Well-
good thing, I could say.
Yeah. I mean, I think what happened, to be quite honest with you, when all this COVID-19 started happening, right?
It changed.
There was a lot of changes, right? A lot of changes, and now you're starting to see the banks kind of get a grip of what's going on and starting to adjust, just like we are.
Exactly.
Yeah.
Mhm.
So, I have a lot of friends that are veterans. They've been asking me, like, I was actually hanging out with a buddy of mine today, and he has a VA. He was like, "Hey, should I buy, Christian?" And I was like, "Well, tune in to Facebook Live or Instagram, and I'll be sure to make sure to answer that question for you." So, I talk a little bit about the VA program, because
Well,
I
let's
think
do
it's a phenomenal program for people that have served for our country.
Yeah, we still have the BA program. Obviously, it's 100% finance with the BA, and we only need 620 FICO score on the
620
BA.
FICO score, guys.
620. So we're still good on that. We could still do, it's 100% finance, obviously, and it's a good program for the BA, for our people out there to help us. Yeah.
Explain to 100% finance. What does that mean?
That means covering the down payment and the closing costs as well.
Okay, cool. That means zero
Money.
out of pocket. Is that crazy?
Yeah.
So
Very much.
that, again, that's a VA program. It's available for the veterans. It's been around forever. And if you guys are out there, you have your certificate, take advantage of it.
Right.
What better way to get yourself into a home with as little as money as possible. So again, I wanted to just go back on the appraisal just a little bit, just so they understand what a drive-by appraisal is. Just basically what it sounds like, So
Exactly.
yeah, appraisers
So
are
simple.
going. Yeah, they're going out there, they're checking out the property.
Make sure the property is there. Nothing has happened to the
Yeah.
property. Take a picture, it's there, and that's it. They're done with the appraisal.
Yeah.
They don't have to actually go inside the property to make sure everything is in order, they don't care anything about inside the property. They just care about the outside of the property. That's it.
Cool. Awesome.
Yeah.
So, one of the things that with the COVID-19 that's going on is a lot of the realtors, they're asking me, like, "Hey, how can I get hold of my loan officer?" Because the people they don't want to go out and maybe go to like a facility office like ours. So just like real estate, I think we made a big change, right? You need change with what's given out to us. So tell us a little bit how you're taking your appointments. What are the safety measures that you're doing to make sure that consumers out there are receiving not only the service,
Exactly.
but also safe. They're safe out there.
Honestly, 100% of my applications right now, they're being done over the phone. That's
Mhm.
all I do, over the phone.
Okay.
And to make things easy for them, most of the programs that I have or that I worked with, they're W-2 and pay stubs. So
Okay.
I don't need the whole tax returns paperwork, I only need the W-2. So I always tell them, just take a picture of the W-2, picture of the pay stubs, picture your license, your social, and that's it. That's
Cool.
all I need.
Yeah.
And I don't need much.
Yeah.
And that's what they do, and I do everything by text message. That's
Okay,
it, yeah.
cool.
Mhm.
What about Zoom? Are you doing any Zoom
I do
meetings?
Zoom applications just in case they're
Uh-huh.
not too sure, because sometimes some clients, they do wanna know exactly, what are they signing,
Mhm.
and they want me to go over numbers, and sometimes I'm a little bit confused, and that's when I do the Zoom, like, I take the
Yeah.
application to Zoom, explain to them step by step where their money they're going, you know?
Yeah,
Mhm.
and I think the one thing that I can tell you is that everybody, although the consumers out there are very, receptive of being on the
Right.
camera, especially when they're doing such a large purchase,
Right.
like a home purchase. So that's available. So realtors out there, you guys have, good loan officers that's gonna give you the good service for your clients, and also, virtually, on Zoom, Lizette's doing it, so that's awesome. I'm sure a
And
lot.
rates are really good right now again.
Yeah, the
We're
rate-
back again to the rates being so good. We're in the threes again, back to the threes, so that's pretty good.
That's awesome.
Uh-huh, yeah.
Yeah, when all this happened,
That was horrible.
yeah, I know, about a month ago, we really went from, hey, the rates were super low, right?
Below threes.
Yeah, and then we were just getting phone call, email, text, consumers out there, they wanted to take advantage of the rate, and then this happened, right? And all of a sudden, it just went from that bottom rate to
Close to
just,
6.
Yeah,
We're looking almost, I even quoted a client for almost a 6%.
wow,
Yeah.
well,
So
listen.
it was crazy.
Yeah, I was doing loans a long time ago, and I was giving my customers 9.5. So,
Wow.
but I'm talking back in the long days ago. But the rates are back, so that's going to open up some refis.
Cash
Right.
out.
Cash
All
out,
my clients
yeah.
are calling me right now to do a refinance, to do a cash out, and
Mhm.
and I mentioned to them, if you could do it at this point, you're still working, you have the credit, go
Mhm.
ahead and move forward, why not, But some of my clients, they just thinking about it, and I'm like, don't think about it, I really think it's about the right time right now,
Mhm.
and they just proceeding and we're moving forward, because,
Okay.
they're waiting for the rates to drop below 3s, and I don't
No.
see that happening anytime
Yeah.
soon, for sure, yeah.
Yeah.
Mm-mm.
No, and I think one of the things that we want to talk about, we talked a little bit about as far as the first time buyers, right?
Mhm.
So, well, like I mentioned last week, right? The real estate, the way it works is first time buyer buys a property, they're so excited, right? And then that person that sells that property is usually looking to the move up property, right? Maybe a bigger home. So the scenario could be something like, hey, you know what? You got a young family with, a baby and maybe a 5-year-old, something like that. They get into a 3-bedroom, 2-bath home, 11, 13, whatever, 100 square feet.
Yeah.
Right now, they're ready to jump into the bigger home. So tell me a little bit about those type of clients. Maybe those would be like the conventional, right? So
You're
talk,
right.
talk
Yeah.
about those type of clients that maybe are looking into getting into the mid-level home.
Yeah, since they don't qualify anymore, obviously, for the FHA because they're currently on their property, then we had to do it conventional,
Okay.
just like the way you say right now, and they could still do it like a conventional with a little 3 to 5% down payment.
3 to
3
5.
to 5%
Okay.
down payment.
Cool.
Obviously, the property has to be more, bigger, more square feet, or more like, just to, they have to be a bigger house than what they have right now.
Okay, gotcha.
Okay?
Okay.
It has to be their primary home to get it with 3 or to 5% down payment.
Okay, gotcha.
Mhm.
Yeah, and most of these guys or gals that are out there owning these properties, they purchase. If you purchase in the last, let's say, 3 years, you got quite a chunk of change in equity.
Yeah.
So a lot of them are rolling that equity into the next property, which is really cool. So, tell me a little bit about someone that's coming in with a heavy down payment, 20, 25%, how easy is it to get a loan, or maybe how difficult it is to get a loan
And
with those types?
conventional was to doing the 620% down, like the 625 score. So
Okay.
even though they're this is gonna make the application look better if they put in the 20%. And it will be way better because they're gonna waive the MI insurance. They're not, if they put in 20% down payment, they're waiving the MI insurance, and they're not gonna need that, and at least we need a 625 score, that's it,
Okay.
nothing else, yeah.
So I know there's a lot of you guys know what an MI, but let me take this opportunity to
Oh.
let these people know that may not know what an MI is.
And you will be good at explaining that,
Well,
for sure.
We can just keep it simple. It's just, basically when you're putting a huge down payment, right? The banks really are flexible, and they don't require you to have that additional
The MI
insurance,
insurance,
right?
yeah.
Yeah, so what it really means is that your payment is even lower, right?
Right. Mhm.
Yeah.
Yeah.
So think about it, the banks, the higher the risk, they wanna have a little more insurance.
Exactly. Mhm.
Yeah. So that's good. That's what's really driving the market. Is not only the first time buyers being out there, and the move up buyers, right? Because then the next step would be the dream home. Like the goal, the trophy homes. The $1 million homes. And last week we were on live, and a lot of people asked me, "Hey, is that market taking a dip?" And I was explaining to them, like, this is kind of how it works. As far as the financing, what can you tell me as far as for those consumers that are out there, or the agents that are selling these $1 million homes, or high 7, 8, 9, million, 1 million, 2? What type of financing can you give those guys?
Right now we have the high balance, but most likely on those ones they're gonna fall up into the bank statements program, which is
Okay.
gonna be the 12 months bank
Okay,
statements, or
okay.
either 12 or 24 months
Okay.
bank statements. And those, the long as you approve it, we're okay at 625 FICO score.
Wow.
But it has to
620
be
FICO
approved,
score
yeah,
again.
625 FICO score again.
Okay.
Well, they had to put at least 35% down payment on those programs.
Okay.
We had to do it.
Yeah, and to be quite honest with you, those type of people, they have
It's
that.
high risk,
Yeah,
like
high-
we say again.
Yeah, they still have, they have a lot of money. As
Yeah,
far
they
as,
do.
they're moving the equity out, right?
Uh-huh.
If you're buying $1 million house, you're not putting in 5% down.
Exactly.
I mean, you
You
could.
do have the money
Yeah,
already.
Yeah,
so
you
buy-
could.
yeah.
I mean, we've seen it. We do those type of loans, but traditionally, those type of homes, 30%, 40%, 20%. I think that's more or less where we're starting. Yeah. So I had a buddy of mine text me just before we went live. His name is Brian, and he asked me, he wants to refinance his home, and I'll take this opportunity, put you to the test.
Oh, wow.
So I mean, you don't have to. Just tell me if this is something that's doable. So he has a first and a second, right? It is a high balance. I think the loan amount is right around 800,000, right? And his FICO scores through the roof, 800, 790, great FICO scores. And he wants to just rate in term. He doesn't want to cash out. He just wants to get rid of the second and get into just one loan.
Yeah.
I'm a realtor. I'm an expert where he lives, so he's got plenty of equity.
I was gonna say,
Yeah,
as
he's
long
got-
as he has
yeah.
equity,
So-
we're good to go.
Yeah, I would say that it's probably right around 70% LTV. So
Okay.
I mean, should be a slam dunk for you, right?
Right, I
Yeah.
mean, as long as it has equity,
Mhm.
we're good to go. And if
Okay.
he has 30%,
Mhm.
then that's enough, that's how much we need. They may ask for 12 months reserve, 6 months reserve, to
Okay.
shop around, but
Uh-huh.
yeah, we're good to go on that one. Mhm.
Okay, well, that's cool. And that's the beauty about, again, being a broker. And did you mention?
Yes.
Right off the bat, just like, I need to shop around for him, right?
Mhm.
So that's the difference between us being a broker and being a
We
direct
have
lender.
options.
Yeah, we have multiple options.
I don't know
Yeah.
if you heard about Chris, I heard this last weekend,
Mhm.
that Chase is just doing the 720 FICO score and
Uh-huh.
20% down payment, just on purchase. They don't have any other
Uh-huh.
options, that's all what
Yeah.
they have available at this point,
Yeah.
It is what it is with them.
Yeah, it
Mhm.
could be. It could be. I don't really worry about what they got going on. I
Yeah.
try to focus on us. So
I always try to see my competition, what's up there.
Yeah. No,
Yeah.
we just worry about us, and I think we're
Yeah.
gonna be fine. Well, that's awesome that we can bring out the consumers,
Mhm.
not only the best possible rates out there, but also the best possible programs.
Right.
That's the beauty about being a mortgage broker. So we covered it quite a bit. I don't know. I wanted to see if there's any questions out there. If you guys are on Facebook Live, you guys can put in some questions out there. I have a team that's behind me here, or actually in front of me here, that can go ahead and answer some of your questions. I don't want to keep you on there, so.
We do have a question.
Okay, go ahead.
So someone on Lizette's account asked, I have a credit of 640 and a 10% down payment. Can I qualify on my own?
So let me repeat that. So 640, 10% down?
Yep.
And what was the question? I'm sorry?
Can I qualify on my own?
Can you qualify on your own? Okay.
That's pretty simple, yeah, is it she or him?
She.
Yeah, she
Yeah.
does qualify by her own, the longest she's been working for at least a period of 2 years, we're fine, we're good to go. Mm-hmm.
Okay,
Perfect.
cool.
Mm-hmm.
Perfect. I know we talked a little bit about the first time home buyers, right? So if you
Mhm.
guys are out there, you're first time home buyers, we got the programs for you.
Right.
Yeah, if you want to sell your house and then buy into a bigger home, we got programs for you there.
Right.
And then also, if you have that big dream and you want that American Dream,
do
and
have
we
programs
got
for
the
them.
$1 million properties, we got that too.
When you don't have enough money, we have those programs too as well.
We got the low down payment
Right.
programs. But I want to talk to you a little bit about the refi, right? Because like I said earlier, I got text, and it's just been going on and on. I've been noticing for the last now 6 months just the refi boom.
Refis, yeah.
Yeah, and it's happening. And just tell me a little bit, and I'll give you guys my perspective on whether I believe you should refi or not, what you do with the money. But just give me a little bit of feedback as far as how easy it is to refinance on a traditional, let's just say an FHA loan right now.
It is really simple, it's not really hard. There are different programs to do a refinance. One of them is the Streamline. Obviously, if you do have an FHA loan right now and it's about the 4%, most likely we could do a Streamline. You don't have to pay for appraisal, which is good, because most of my clients, sometimes they don't want to pay that upfront fee for the appraisal.
Okay.
You know, which is 500,
Yeah.
between 500, 550.
Yeah.
And then that's an FHA Streamline.
Okay.
And then if they want to do a normal FHA, I mean, we could go ahead and do it. If I see there's a more benefit, if we do just the regular FHA, then I place it on the regular FHA. But most of the times, if they do have FHA, I just do a loan stream, a Streamline. That way, they don't have to pay for the appraisal.
Okay, so Streamline, you heard it, it's the best way out there.
An FHA.
Yeah, if you just want to do what we call a rate and term, right? So just drop your payment. So you may be out there, you may be paying, let's just say $2,000, right? And now you take advantage of the lower rate, and your payment may be, let's say, $1,600.
Right.
That's a good savings for you. You know, why not? Why not refinance into a better position?
Right.
Yeah. So that's really, really good. Now let's talk a little bit about the cash out people. People that want a
That's
little
what
bit
I
of
have
money.
a lot right now going
Okay.
on, to be honest with you.
Okay.
A lot of people that are doing a cash out. That's pretty much 80% of my business right now. Clients, they do a refinance, they're doing a cash out, and obviously they do have plans in the futures, and this is the reason they want to do the cash out right now. They're so simple. At least for a cash out, I need a 620. So most of my clients, they do have about 650, 660, and we're moving forward. And the interest rate, they'll be like in the 3s. You know, they're below the 4s, so which is pretty good. The interest rate is not that high. And most of the clients, they're getting cash out, and they're maintaining the same monthly payment they have right now.
Okay, that's awesome. You know, so just to go back a little bit, so if you're doing the rate and term, you know, if you got a little bit of rate around 4%, geez, you can save money, refinance, get into a lower payment, right? And if you have a similar rate and you want a little cash in your pocket, right? Why not? You know, you get the lower rate, put that money into your bank account, right? And then your payment should probably be about the same.
The same.
Yeah, pretty close to the same. That's
because
a slam
most of
dunk.
the clients that I have, they do have like a 4.5, 4.75, and right now we're below the 4s.
Yeah,
So,
exactly. Yeah, so if you have a rate that's higher than, let's just say 4.5, yeah, this should be pretty much a pretty easy decision for you, you know, to either get a rate in term or get a little cash out. So what can you do with the cash out? You know, there's a lot of things you can do with it. You know, you can put money in the bank, just, you know, for a rainy day. You can maybe do some home improvements, maybe even buy another investment property. So there's a lot of things you can do out there.
Open their own business, which I've been getting a lot.
A lot of
They
open
wanna
business,
start opening business,
So that's, you know, the flexibility is there. It's cheap money, right?
Right.
People are lending you in the low percentages, is cheap money. So, you know, if you got opportunities out there that's gonna give you a better return than your rate that you're getting, why not? Take advantage of it. You know,
Why
take
not?
advantage.
I really think right now is the perfect time to do the refinance. I wouldn't advise to do something that I know they're not going to be in a safe spot, and I really think right now is the moment. Yeah.
Yeah, because it makes sense, to be quite honest with you, because of the rate, right?
Right.
You know, the rate. And back in the day, we used to do a lot of rates like, you know, what we call negative AM or adjustables and things like that. Right now, you're getting a fixed rate, right? So your payment is going to stay the same. Yeah.
And you know what, one thing, Chris, like I've been getting, one of the things that I get a lot, like most of my clients, they want to refinance. They're like, you know what, I'm going to think about it twice. And the reason being is because they don't want to start their years again, the 30 years all over again. And I'm like, okay, well, I have the 25 years.
Okay.
Once I disclose to them and I give the application 25 years and I give the estimate with 25 years, that options to them, and I always tell them, I even do the 25 years options, 20 years, and 15 years, so they can see the difference. let's say I feel comfortable with this mortgage payment, you know, let's
Yep.
do and move forward on this one. You know,
Exactly.
I don't wanna, my client to give me just one option and they're like, okay, well, that's all what she offered me and that's it, you know? I always give them like 3 options and I let the client decide what they wanna go for.
Okay, cool. And then just to give you guys an idea, the way it works is if you have a 30-year loan, your rate's just a little bit higher, it's still great, right?
Right.
Then if you go to 25 or 20, or if you go to 15 and 10, that's really when you get the market, you know, that starts dropping a lot.
Right.
Yeah.
Mhm.
So, you know, like a 10-year loan, you're really getting the best possible rate, but then your payment's a lot higher.
Yeah, because they had to pay it off within
In
10 years.
Yeah,
Yeah.
exactly.
Mhm.
Yeah, 15 years, you know, there's a little bit difference. So there's definitely, you know, some pros and cons. But, you know, it all depends where you're at. You know, you could be just barely starting, getting into your house, so definitely 30 years is probably the way to go.
Right.
If you're maybe a little bit older and you're looking maybe down the road and looking for retirement, maybe you want to jump into a 15 or a 10-year loan where, you know, after that happens, you won't have a payment.
Yeah, and then, I mean, I always interview the client and ask them, what do you want to do in the future? Are you planning to keep this property for a long time, for a long term, you know? If I know that, I always try to like not to go back to the 30 years because I know they want to be on the property for a long term. But if they say, you know what, I'm really planning to sell the property this within the next 5 years, and I was like, it would be better if you don't do what do you want to refinance a house for 20 years if you know you're going to sell your property like anytime soon?
Okay.
But I still give them the option and I let them choose, yeah, what they want to do.
Cool, cool.
Yeah.
So I noticed a couple of my teams, they've been playing around with the phones here, so if you know, if we happen to just move your frame around, we apologize. We're just trying to get you on. We have 3 different devices that we're on, so we have a little bit of hiccups there, but apologize for that. But we want to give you guys the most information. You know, during this COVID-19, I firmly believe the more information you can give to your consumers, the better off you're going to be.
Right,
Yeah.
yeah.
The other day I was at Dana Point. Happened to be in the water, and I ran into the surfer guy. He was a pro. I went to talk to him. The reason why I talked to him, I wanted to mention to him that I was very thankful for him to why he puts all these videos out. So he's constantly putting these videos with information that makes me feel a little more comfortable when I'm buying products, things like that. So we wanted to take the time to make this video to answer some of your questions. Buying a home is a great investment,
Right.
you know,
Yeah.
so, you know, if there's anything you guys need as far as questions, make sure you type it in. I have my
Right.
team out there to answer any of your questions out there. You know, if you have doubts or anything, as far as if you may be able to qualify, or, you know, if you don't, we'll tell you what you need to do as far as qualifying.
Right.
You know, because even though the FICO scores, the criteria is still kind of low, right? You may not be at that position. We'll also set you up. Talk a little
Right.
bit about the people that don't really qualify at this particular time. I mean, what do you do for them?
Honestly, if I see the credit's not too far away, I always help them to fix the credit. I tell them like what they need to do to kind of have their FICOs, because I do have a lot of clients that are like in the 600, 580. So, and I analyze the credit. I call the credit company and see what can we do to help the client to raise their FICO score. And I mean, there's no fee for it. The only condition I was telling just obviously they need to buy the house and I had to do the loan for them. That's the only condition I have for them. And yeah, they do proceed, they do follow my instructions, and I make sure they do have the money for everything, I mean, to pay for the.
And again, the difference between working with a broker and working with a direct lender.
Yeah.
And I can kind of give you just a scenario, right? Let's say you do go to Chase, right, and you apply over there. Once they run your credit, that credit is basically what they're going to use. Right, with us, let's say you decide to buy a home, you meet with Lizette. Lizette checks out your credit, right? She's not turning it into any of the banks quite yet. So right now she's looking at it, she's analyzing it. She might do like maybe a rapid rescore or whatever it is that you need. So she's gonna boost up your credit, get it as high as possible
To make it happen.
to make it happen. And then when the bank looks at it, they're gonna look at a credit that's a lot better, that's gonna give you a better opportunity to get into a better loan than if you were just to put it in and you may have little hiccups. So we understand, you know, people that do have hiccups, you know, just like we just did right there.
And right now that you just mentioned that, I remember I just did a refinance for one of my clients about 30 days ago, and It's funny because she went through Chase the first time that she tried to refinance, and then obviously she was denied right
Okay.
there.
Wow.
They
Okay.
denied her. Then she came to me, and she actually went to another broker before she came to me.
Okay.
And they denied her as well. They said they
Okay.
couldn't help her, that she didn't qualify, and I was gonna be like her third option. And I analyzed everything. I was like, I know I could do it. And she's like, are you? She kind of like thought about it. She's like, are you sure? Because Chase
Yeah.
already denied it. Another broker already denied it. Can you really do it? And I was like, yeah, I could do it. And then I put the file together that way I know it was gonna go through.
Okay.
And yeah, I was able to close it, and she's so happy. Yeah. And she
Yeah.
recommended one of her sisters already to refinance her house. Yeah.
Awesome. Yeah.
Mhm.
Yeah.
Yeah. So.
So
I know.
yeah, definitely, you know, working with the right team.
Exactly.
Yeah, is definitely the key. And to be quite honest with you, I mean, the second person, you know, maybe it's a lot to do with experience. To be quite honest with you, it's just like if you the more scenarios you see, it's just really better.
Right.
You know, I was out here the other day. I talked to my guy Aaron Fattel, and you know he runs a lot of business. And he, you know, he was talking to the loan officer, and he was like, "Rookie move!" Right away, he knew it. Rookie move, right? So, you know, it definitely, you know, with all the years' experience and the background, you know, definitely helps.
It
You know,
does,
and
yeah.
you can pass all that knowledge over to the client, not to only get them the best possible rate, but also get them into a loan.
To get them ready, yeah.
Yeah.
To get them
Mhm.
ready to get the right loan for them, yeah.
Yeah,
Mhm.
correct, yeah.
Mhm.
So that's awesome. Well, I just wanted to say, you know, the people that are out there with the COVID-19, I hope you guys are all safe out there. You guys are still, if you guys are working, you know, that's good.
I
If you're
know.
not working, you know, there's
You
a lot.
guys gonna get there anytime soon.
Yeah,
We're gonna be fine.
Yeah, I think things are starting to turn around. You know, things, the more and more I hear, you know, businesses are starting to open up. So I think
Right.
it's not going to go back to the same, you know, like we did like 4 or 5, 6 weeks ago.
Mhm.
But it's going to be a happy medium. So we're looking forward to that.
Little by little.
Little by little, yeah. You
Mhm.
know. So, you know, that's good. So, any other questions we got out there? Otherwise, I'm gonna let Lizette go back to her busy day.
We
got-
have a few questions.
Okay, we got a couple questions.
Someone said, are VA loans harder to get approved?
No, they're not.
Are
Yeah.
VA loans
We just
harder
need
to
the
get approved?
We
Yeah.
just need the certification,
Mhm.
and that's it. And they
Okay.
need to have the 620 FICO score.
Okay,
Mhm.
so a minimum 620 FICO score, right? And
That's
then,
it.
yeah, and then your VA certificate. You know,
Mhm.
there's a lot of sites out there that'll give you, including like if you have like like your credit card, you know, company, a lot of the new credit card companies, they'll give you a FICO score, right?
Right.
Yeah, you can
Mhm.
actually check. So
Mhm.
we run what we call as a merge FICO score, so it gives you all the different bureaus. But 620 is a pretty
It's a
flexible
FICO score.
Yeah, yeah.
Yeah.
So it's
Mhm.
not, you don't have to have perfect credit, you just have to have good credit.
Mhm.
Yeah.
Just send credit to make it
Okay.
happen.
Mhm.
Mhm.
And another person asked, what's the refund on a home mortgage rate?
I'm sorry, repeat that. What's a refund on the home mortgage rate?
Yeah,
Oh,
on a home mortgage, and what's the rate? Sorry.
you know what? If you
They
could,
trying to say what's the refinance rate?
what's a
right now?
refinance rate? That's probably what it is.
They said refund, but they might have meant something else.
Yeah,
Okay,
probably,
yeah, that's
yeah.
probably what it is. Yeah, if we're wrong and you had a different question, maybe retype it in for us. But
Mhm.
if the rate, we're actually not allowed to give you your rates without the APRs and things like that.
Mhm.
But we can tell you that more or less they're very, very good right now. It
Yeah.
all depends on your scenario.
Exactly.
Yeah.
I
Mhm.
totally agree with that.
Mhm.
Mhm.
Yeah.
Yeah.
All right, that is the questions.
All right, guys. Well, I want to thank you.
No, thank you.
Thank Lizette for coming in over here and taking a little bit of time. I'm gonna jump on my Instagram live in about 10 minutes. What time is it right now?
5:36.
436.
4:36.
4:36.
4:36. So I'm gonna jump around in about 10-15 minutes for some of the new agents that are out there. You guys are getting started. I'm gonna take about 10-15 minutes to answer some of your questions. You know, I'm sure you guys are all eager to get into the business, and then boom, this happened, right? Or you just started and boom, this happened. Well, I've been in business for 20 years. I know what it's all about. So tune in about 10-15 minutes. I know I didn't post it, but I just figured while I was driving out here, I can give you guys some feedback, some little things there. So I'll be on my IG page, which is Christian Munive 1 at IG. But thank you, Lizette, for coming in.
And thank you everyone for being there with us.
Thank you for watching. Stay safe. We'll see you guys soon. Tomorrow we are doing another live one on marketing. I'll have my marketing team out here explaining to you how we're keeping Dynasty listings up in front of all the viewers. All right, take care, guys.
Thank
Bye.
you. Bye.